Hello dear traders, I'm Marina Generalova and here is our weekly stock markets review brought to you by InstaTV team. Wall Street was mostly in the green area on Friday, although at the end of the week the US stock indices remained in the negative territory. The investors were split on the start of Fed's tapering, pushing the stocks down on the week. Thus, the Dow Jones Industrial Average strengthened 0.1% to 5,755.36 points, although the blue chip index shed 1.7% on the week. The S&P 500 closed lower 0.18 points Friday at 1,775.32, having lost 1.7% at the end of the week as well. The materials and technology sectors were the main S&P 500 growth drivers, whereas the energy and telecommunications sectors were the biggest laggards. At the end of the week, the healthcare and technology companies contributed the most to the S&P decline. The final Nasdaq reading clocked at 4,000.98 points, after the index gained 2.57 points. Nevertheless, the index's weekly decline totaled 1.5%. In the absence of significant economic event, the market braced for the upcoming Federal Open Market Committee meeting scheduled for this week, which should clarify the timing and volume of any winding down of the economic stimulus program. The analysts noted that the market indicators lose ground ahead of the two-day meeting. At the same time, they suggest that after the meeting is over, the traditional December pre-holiday rally will continue. Anyway, the technology companies' stocks were rising during on Friday, and the Twitter quotes grew 6.6% during the last breakthrough rally to hit $59 per share. On Friday, the social network upgraded its new function. Now it allows the blocked users to keep the subscription and reply to messages from the people who had blocked them. At the same time, Mastercard Incorporated showed the best performance among the S&P components. The company's papers grew 3.5%. In early Thursday, the corporation announced that the Board of Governors approved a 10-for-1 stock split. Mastercard aims to pay out higher dividends to its shareholders and spend up to $3.5 billion on its new share buyback program. This split calls for the stockholders to receive 9 additional shares for each one. Thus, Mastercard will issue additional 1.1 billion more shares, which will decrease the stock price tenfold. That was all for last week. We will be keeping you updated. Goodbye.